Today we would like to shed some light on the intricate web of taxes that shape the economic landscape of Hungary. First of all, the value-added tax. This tax applies to all the goods and services produced within Hungary. At a standard rate of 27%, it casts a broad net over most transactions. However, certain essentials like dairy and bakery products, as well as hotel services, enjoy a reduced rate of 18%. Medicinal products and medical instruments benefit from an even lower rate of 5%. When it comes to real estate, a distinct tax regime comes into play. The buyer bears the burden of 4% tax on a real estate purchase, separate from the selling price. Furthermore, the property owner faced the local property tax divided into land and building tax with a maximum of 3 and 3.6%, respectively, based on the market value of their holdings. But the taxation landscape doesn't end here. Municipalities impose a local business tax capped at 2% with varying rates over regions. Calculated and adjusted net sales, this tax adds another layer of financial responsibility for businesses. Let's not forget about social security contribution, both for employees and employers, with rates set at 13% for employers and 18.5% for employees. This contribution plays a crucial part in the social safety net, with providing support for workers and their families. And there is the excise tax levied on specific products such as energy, alcohol and tobacco, with its own regulation and compliance requirements. And lastly, the Hungary's corporate income tax, which stands at 9%, and it reinforces the government revenue stream from businesses operating within its borders, albeit with provision for exemption and reduced rate under certain conditions.
Hi everyone, my name is Ayub, and in my section we will focus on the specific aspect of tax law enforcement that is related to Kulker Ltd's failure to register with the local municipality's tax authority, and we'll also explore the options that are available to the company. So we're going to start with the tax law enforcement for failure to register. There are many options or possibilities. First one is penalties and fines. So the local tax authority may impose penalties and fines on our company for failing to register for local business taxes. These penalties could vary depending on the jurisdiction and the duration of non-compliance. The second one is closure order. As seen in our case, tax authorities may issue closure orders for businesses that fail to comply with tax registration requirements. This enforcement action can severely disrupt our business operations, and this will lead to financial losses. The third one is seizure of assets. In extreme cases of non-compliance, the tax authorities may have the power to seize our assets in order to recover their unpaid taxes and penalties. This might include seizing our inventory, our equipment, or generally any other valuable assets belonging to us in order to compensate the unpaid taxes. The fourth one is legal action. The tax authorities may initiate legal proceedings against our company to enforce compliance with tax registration. This could involve court orders compelling the company to register for local business taxes or face further consequences. The fifth one is the public disclosure. The tax authorities may publicly disclose the non-compliance of our company with local tax registration requirements. This is so bad for our company because it could damage the company's reputation and credibility among our customers and suppliers and any other stakeholders in general. So right now we will see the options that we have to save ourselves from such a situation. The first one is to register immediately. This is the most straightforward option for our company. We have to promptly register with the local municipality's tax authority to comply with the local tax registration requirements. This can involve submitting the necessary forms and documentation and paying any outstanding taxes and penalties, of course. We can also appeal closure order in case there was any closure order against us. We can explore the possibility of appealing this order issued by the tax authority. This might involve demonstrating efforts to rectify the non-compliance and requesting a reduction in the duration of the closure period. The third option would be to negotiate settlement. The company can negotiate with the tax authority to settle any outstanding taxes and penalties, potentially reducing the financial burden and mitigating the severity of these enforcement actions. The fourth one would be to seek legal advice. Our company can consult with legal experts, which is really important because they are specializing in tax law, so they can assess our rights and options in dealing with tax enforcement actions. The legal counsel would provide guidance on the best course of action to minimize the impact on the company's operations and finances. And the last option would be to implement compliance measures. In this option, we're not talking about right now, but we're also referring to the future, because going forward, our company should implement robust compliance measures to ensure timely registration and compliance with all tax obligations. On both, of course, the national and local levels, we may involve establishing internal processes and controls to monitor and manage tax compliance effectively. So that was it for me, and I will leave the floor for my colleague. Thank you.
Hi, I'm Richie or Richard, and I'm going to talk about taxation. And yeah, I'm on my gallery, and this is the most random thing I've ever done so far. So let's get started. So, more precisely, I'm going to talk about what not to do about taxation. There will be 5 scenarios, and I'm going to refer to Kürker Ltd. because this is an easy way to understand everything about the regulations and stuff. So the first one is the failure to pay taxes. It's pretty easy. Basically, you didn't pay the taxes, so the tax authority makes you pay a fine or close your shop. The period is around 30 days, I think. The second type is tax evasion. It is a pretty common thing in Hungary and around the world as well. The punishment is the same as in the first scenario. So if I were Kürker Ltd, I wouldn't do tax evasion either. The third one is not completing the regulations. There are many things which can play a crucial role. First of all, you have to keep these licenses for 5 years in Hungary, I think that's the date. And if you not keep these licenses, the tax authority can do the same as in the first 2 scenarios and make you pay a fine or close your shop. It is important to keep these because they can ask for it anytime, in any day. So make sure to have those papers. And the fourth one, it's a pretty tricky one, is the failure to register for taxation. There are in businesses in Hungary, you must register for the taxation. You have to have the licenses. What does it mean? If you have the licenses, you can operate the shop. If you don't have the licenses, you cannot do any activity on the market. So make sure to have those licenses because it's necessary for legal activity. And the last one is, sorry for the noises, that's what I meant by making this random video, repeated violations. If you repeat the first 4 scenarios, basically the tax authority can do and make harsher punishments. As an example, losing your freedom to make you closer or to go to jail. It's the common thing. Basically it means that you cannot do anything because you are at the jail. and it is pretty not common, I would say, but a good way to remove illegal activity from the market. So that's all I wanted to say. I hope you guys enjoyed, and see you next time.